The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody. This is the Tax Lady, and this is our hour to talk taxes. And we got some stuff happening that we want to make sure that everybody knows about. I'm joined in the studio with Chris Fabian. I think Tiff took the day off, right, Chris?
Right. She's a little busy today, but I'm here. Hello, Esther.
Hello, Christopher. All right, so let's first talk about the Road to Retirement Seminar. Are we getting pretty full with that?
There's still spots available. You can still register online at egtax.com or give our office a call at 632-7886. You know, it's a great opportunity for you listeners out there to get free advice on ready when you're thinking to retire, if you just retired, or if you've been retired for a while. We're going to have
and that's kind of what we're going to talk about today. We're going to talk about being retired, getting ready for retirement, things that you want to look at, things that are in your toolbox that maybe you didn't even know were in there. And that Road to Retirement Seminar gives you an opportunity to talk to professionals, like free talk. You can actually talk to an attorney, several attorneys.
Yep.
At no charge. They do a presentation. We talked to healthcare professionals so that for your health insurance, obviously we're going to do something on taxes and tax planning for people. Who else do we have?
We have financial people to talk about your money. We have a Medicare specialist for if you're worried about nursing homes and things to do for that. Like you said, for Medicare for health insurance for when you're 65. We have life insurance. We have everything you need.
Yeah, I think you're going to find it really fascinating. And the other thing is, nobody's going to try to sell you. It's not like because we're all. You know, if you've listened to our show for a while, we're all about giving people information. I really feel like if you give people qualified information, you don't have to sell them, because the fact that you aren't selling them makes them understand you're in their corner.
Exactly.
So,
and it's November 5th at our corporate office. That's 1890 Colvin Boulevard. Presentation starts at 10. You might want to get there 9:30 to start reserving your times to speak to different individuals. And we're going to have
we'll
lunch.
have some pamphlets out so that you can figure out which seminars you want to attend, because we have them in two separate rooms, right?
Right. We have just the initial half hour will be people talking about what they can offer you, and then you can elect to do a private 15-minute talk with them.
Right. It's wonderful. So that's that. And then we also have tax school coming up the middle of this month, right?
Right. Can't forget tax school.
Well, actually, it's October.
September.
Yes. I keep thinking September's over, but it's not really.
Not yet. We don't want the next year to start sooner than later.
Not yet, right, that's for sure. So our tax school starts the middle of October. Again, you can go online. It's a tuition-free school. We really go over everything. It's too much for any human being to absorb first time out of the gate, but it gives you an introduction so that you can continue your education. We will train you all the way up to enrolled agent, which would mean that from the IRS's standpoint, there's tax attorneys, enrolled agents, and CPAs. Those are all in the same kind of bucket. So you could really go anywhere in the United States with an EA certification and go to work at a CPA firm, because it's absolutely free. So that's part of what we do when you come to our tax school.
Right, and we have schools in Warsaw, in Derby, Tonawanda,
Batavia.
Amherst, Lockport, Batavia, Niagara Falls. So wherever you live, we have you covered. And if those times don't work or those locations, you can even do it online if you're a do-it-yourselfer.
Right.
So
absolutely. So that's kind of what's coming down the pike for us. Our phone number, by the way, if you're getting love letters, October 15th is a big day. What's that for, Chris?
that is extension deadline day.
That's right. You got to pay the piper.
Right. And let's not forget, too, the end of this month is if you still haven't filed your 19 or 20 return to get it in, and if you owe them money, they're going to waive the penalty for filing late.
Which is remarkable. And at this point in time, it's like 25%
Yep.
on your balance due, so it's a big number. So, and those of you that are getting refunds, and you go, why would I get a refund? Because I owed them money. They're paying you that money back because that's after the fact that they
Right.
came up with this change.
Yep.
Right.
So
All right, I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930 because we'd love to hear what you want to type out. The other day, for those of you that are in the stock market, and I think we all are kind of in the stock market if we have our pension plans and things of that nature. There's been a drop in the value of the stock market by 20%. Well, from its high. And it's interesting because about that time when this was all happening, and it's terrible to see, nobody is happy about it, I'll tell you. I had a text message from a client who said that his stockbroker had moved him in from a traditional to a Roth in January. And he was wondering, can he pay that at the lower value because he's lost 20%? So, but unfortunately, when they did the rollover, whatever the fair market value was at the time of the distribution from the traditional to the Roth, that's what it's taxed at. And I'll give you just a little simple explanation. If he had $100,000, which is now worth $80,000, he has to pay taxes on the whole $100,000, which would be conservatively 30% or $30,000. So what he has really left in his portfolio after he pays the taxes is going to be $50,000. So it's a 50% reduction. So you have to be very careful when you're doing those conversions that you make sure you know what you're talking about, because you can lose a whole bunch of principal in that distribution, because what gets transferred over, just because it's tax-free when you take it out of a Roth, doesn't mean you're not going to pay taxes right now when you do that distribution.
Right. And that's where people get very confused at that, it's tax-free. It's tax-free when you take it out because you got to pay tax when you put it in.
Right.
And that's how they let you do that. So,
but remember, if you put it in up till this time, as the market's been dropping, and you put it in at the top, unfortunately, you're going to pay taxes of what the value was at the time of that rollover.
Yeah, and it's
just very sad.
It's just like people with their minimum distributions this year. They got to do it by the value of
when it at the high thing, right?
December 31st, and
absolutely. Okay, I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. You can text us to 716-8030930. I know we have phone calls waiting. We're going to take a short break, and we'll be back with your calls on the other side.
We are family. I got all my sisters.
Hey, family, this is Esther Goulias, the tax lady. We certainly want you to think of us as part of your family. Use us anytime you have questions. We'll answer back right away. And I'm going to tell you, before you do something, like whenever it has like 4 or 5 zeros after it and you're going to do it without talking to somebody, call us first. It doesn't cost anything. And we'll give you the other side of the coin. Or we may just say, that's a great idea. Right.
But
it's best to run things over with somebody.
Yeah, if you get letters from the IRS, New York State, don't just pay them. Let us take a look at it, because 70% of the time they're wrong.
Right. Correct. Okay, Alan's been waiting. Hey, Alan, how can we help you, sir?
Yeah, hi. Apparently, I just found out this existed because I'm about to turn 65 and eligible for Medicare,
Right.
but I'm still working. I plan to work through all of at least next year, and I
Okay.
have my employer health insurance, which includes an HSA. talk to somebody about Medicare. However, there's going to be a tax penalty because I have an HSA and I contribute, and my employer contributes, if I don't get rid of that HSA before I sign up for Medicare.
Okay, so Chris, give him the bad news.
You just can't contribute to it once you go on Medicare. You can still have your HSA, you just can't make any more contributions.
Is there a time limit before I sign up? Because I'm told I'm going to be 65 in November, and they said I got like a window of 3 months before, 3 months after, that I have to sign up for Part A Medicare. Is that correct, even though I'm still working and still covered under my employer?
Right, you still have to sign up for Part A. Your best bet is to call Brian Faraci. You can, or his team. They are at our office as well. You can call us at 632-7886, and we can get you his number, and you can call and ask him all the questions for that. And speaking of that, he's going to be on the radio on the 8th of October.
Oh, okay.
You can just call then too. But I think you're going to find out that 65 is the golden cutoff, and that's when you have to be on Medicare. I mean, that's the magic date. Now, you don't have to take Medicare Part B because you're covered under your employer, but you certainly don't want to make a contribution after you're age 65 because they're going to penalize you. So why would you?
Yeah, well, how's that calculated, though? And is that just IRS, or is it also New York State?
The penalty is just IRS.
Right, but how do they calculate? I've contributed all the way through this year, and the way my employer plan is set up, contributions are going to go in there through December 31st. I turned 65 in November.
I think you got to have them turn it off. I think
you
got to tell them
you have to tell them to turn it off.
Yeah.
Okay. Is there?
I mean, they should understand. You're 65. That's it.
Yeah. Is there?
Darn
is there a
it!
window?
But that's the way it goes.
I couldn't tell you about a window right now.
Yeah. But that guy Brian, you said, if I
Yes.
call him,
Yeah.
Yep.
just call your office.
Okay. Hey, thanks for
Yep,
listening,
just call
Alan,
our
and thanks for your
office.
question.
Definitely just call our office. It's
Right. Okay. And Chris, we got a text.
We do. Can you please repeat the date you mentioned earlier that avoids paying penalties?
Well, it's not just penalties. It's penalties for failure to file your tax return.
Right.
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 And so that would be for years if you have not filed your return for 2019 or 2020, and maybe you didn't because you didn't have the money to pay, and then they were going to charge you a 5% per month until it got to 25%. They're waiving that penalty.
Right, right. You're still going to get hit with the penalty for not paying on time, but that's only a 0.5% penalty. So that's
it's that's a lovely penalty, but the thing that they're forgiving is the big one.
correct.
So you want to make sure that if you haven't filed those 2 years returns, that you get them in. You don't have to pay them. You just have to get them in to avoid that penalty, and then they'll bill you. And if you come to see us, we'll help you to set up a payment program if that's a problem for you. Right?
Definitely.
Okay. And then we have Sue. Hi, Sue.
Hello. I'm calling to find out if I call your office, is it difficult to get in, or is it easy to get in?
No, we're all there waiting for you.
Oh, great.
I mean, we have clients that see us every day. And, we're busy doing all kinds of things. But when you call Amy, she'll make an appointment, and you come down to 1890 Colvin, and we'll be there to take care of you.
Thank you so much. Okay, I'll be there. Thank you.
All right, thanks, Sue. It's interesting because when I broke my hip, I spent 8 hours in a wheelchair, and nobody paid attention to me in the lobby of a hospital. And I wrote the CEO of this particular hospital, and I said, if I had somebody in my waiting room, and they're not in a wheelchair, for an hour, I would have gotten up and said, gee, what are you waiting for, right? 8 hours in a wheelchair. So, no, we are not somebody that's going to make you wait.
Yeah, yeah.
Right,
Did they
Chris?
ever respond?
I really respect everybody's time, and that's something I'm a persnickety about. Right?
Yep, definitely.
I can think I'm persnickety about many things, but okay. 8030930, 8030930, star 930 on the cell phone. Our text is 716-8030930. Let's talk about, as you're maturing, things that you should be looking at. And obviously, with what's happening in the stock market, I'm sure it's got a lot of people saying, I don't even want to look at it. But I think that you need to look at it because you need to know where you are, because maybe you need to sit down with your broker and take a look at the investments that you're in. Maybe you want to move to something more conservative, or maybe you want to buy more investments. But the important thing is, it's like anything. You don't want to put your head in the sand just because you think it's bad news.
Right. I had somebody call this week and go, I'm going to pull all my money from my stock accounts because I'm tired of it losing money.
Right. I mean, I don't blame them for being tired of losing money, but it would cost. But if you're going to have to pay taxes, that's like a double whammy, right, Chris?
Right. I mean, talk to your broker, see what else you can do. You could take the losses to offset the gains, but you may also, there's restructuring, there's different things to do, and don't just act, because once you act, it's too late to do anything. We can't help you.
And in other words, when you're all alone and you are making some of these decisions, or worse yet, your neighbor over the back fence told you to do it, you're the one, when it's tax time, is going to be forced with paying all these taxes that you didn't know anything about, or you find out that your investments are even worse off because now you got to take money out of the investments to pay the taxes. So that's part of what we like to do, is be your sounding board, so that we can give you other alternatives. And a lot of times people say, well, but I don't want to pay 25% interest on my credit cards, so I'm losing all this money in the stock market, I may as well just pay off my credit cards. And in many ways, that would be correct, but it all depends on what the investment is. Is it in a pension plan, or is it just in the market? For instance, if you had just have stocks, and let's say that you had, it was a good pick and you're ahead of the game, and you have credit cards, maybe $10,000 in credit, and you want to pay them off. If you sold that stock and it's outside of a retirement account, then all you're going to do is pay on the gain of the stock that you're selling. And because it's a capital asset, it has a special tax rate. It has a lower tax rate. So you might want to take a look at that and you say, okay, if I pay the taxes and I take the $10,000 out, I pay $2,000 in taxes, I net $8,000, and I can put that on my credit card, and that's not so bad. But if you take $10,000 out and you're under the age of 59 and a half, and it's out in your pension plan, then it isn't taxed at a maximum of 20%. It's taxed at whatever your prevailing rate is, federal and state, and it can really hurt.
Correct. Yep. I mean, you got to do the planning.
I mean, and that's what's so important. And it's just worth that phone call. The other day I was dealing with something on my own personal finances, and I thought, I wish I had somebody to talk to in the world of finances that I had confidence in, because it's scary when you're out there all on your own trying to think of what to do, and that's where I think EG Tax is so good. We aren't going to charge you to talk to you.
Right. People are amazed when they come in and they spend 25 minutes with us and we give them all this advice. They're amazed that there's no cost.
Right. I'm Esther Galias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And so now let's say that you're somebody looking at retirement. You should pull your Social Security statement. Don't you agree with that, Chris?
Right. You want to take a look, just make sure they have all your income for all the years.
Correctly.
Yes.
Because many times you'll find out that they might have missed a year.
Right.
Or they put the wrong figure in. Or if you're a self-employed, maybe they accidentally credited that to your spouse's account. Look at your Social Security statement, and you get that from going to socialsecurity.gov, and you can download it. You log in, set up an account. You can download it, or they'll mail it to you. But that's the first thing you want to do, is take a look at how much is your Social Security going to be when you retire, so that you can put that into your planning. And then the other thing is, how much are you going to need when you retire?
Right.
To live on. I mean, what lifestyle do you want to have? Do you want to keep working part-time? Do you have a mortgage on your existing home? Now, I will tell you, we're in a correction. It looks like we're in a downturn. So it looks like some of these houses that we bought where everybody was buying, you're going to find that the property values are going the other way. Right?
Yeah. Yeah. I mean, not as fast as they've been going up, but properties are starting, it's starting. I don't think we'll ever see where it was, but you got to watch where it's been, what it's doing.
But the whole thing is you want to make sure that you can afford, is looking at retirement, when you take a look at all the income that you have, all the assets you have, what your lifestyle is, and you want to plan. I mean, when interest rates are rising and the cost of goods is going up, you have to plan that in your retirement cycle.
Yes. I mean, you got to, as I always say, it's that nasty B word, the budget.
Yep.
I mean, and that's people don't realize how much of a difference it is when you go from a paycheck to a retirement check, and what the difference is. And then
the other thing is, when you're doing your planning, you have to plan for health care, because it's not cheap.
No.
When I broke my hip, and they gave me a prescription for whatever the heck they gave me it for, and I went. They got it from the pharmacist. It was $500 for a 30-day supply.
Holy cow!
Yeah, you would have think I would have grown a new leg.
Yeah.
For $500, but. Planning those kind of things, if you were on a tight budget, what would you do?
Yeah. I mean, that's the unforeseen.
Right, absolutely. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to be back with your calls on the other side. Hey family, this is Esther Golias, the tax lady, and we want to help you to make sure that, the taxes are an important part of your overall financial picture, because you can really do things that can shoot you in the foot if you don't know what you're doing with your taxes, and that's number one. But looking at everything else, the whole thing comes together like ragu. It's a whole bunch of stuff in there that you have to look at when you're trying to do your financial picture. And that's kind of what we're talking about today. Getting ready to maybe change your lifestyle. Maybe you're looking at retirement. Maybe you're looking at just cutting back your hours. All those kind of things affect your tax return, number one, and affect that maybe the way that you're spending your money. So wanted to talk about that. And we have Marie, who's been holding. Hi, Marie. How can we help you?
Hi, Esther. I've been on disability for Social Security for like 11 years, okay? And my estranged husband passed away 3 years ago, so I started getting his Social Security. Mm-hmm. And so this year, I find out I'm beneficiary of his pension. So it's New York State pension. I get a letter from New York State. I did all the paperwork. They sent me a almost $16,000 death check. And then I got a $14,000 check, and I called them up and I said, I didn't want you to make a mistake. I said, what is this for? And they said for the last 3 years, that's his pension money. So I know I don't have to pay New York State on a New York State pension, but I have to pay the IRS.
That's correct.
And I was just wondering, how much do you think?
But if you got a death benefit, if you got an insurance portion,
yes.
The insurance portion should not be taxable.
Right.
But the pension portion is going to be taxable.
Right. And that's around $15,000. Plus I get over $400 a month on the 30th of every month now.
Well,
and when did
that
start?
Pardon me? That started right after I got that check, because then I paid direct deposit, and they put me in for that.
Okay, but was that like June? Was that August?
Oh, God. Maybe August was my first one. I'm not sure, but...
So you got the lump sum and then the monthly money, right?
Right.
Are you still single?
Nope. Well, yeah, technically.
All right, so you're not remarried?
Yeah, no.
And you have no children living home with you?
No.
So you're probably going to have a small federal liability, and of course you're going to owe the state of New York nothing.
Right. Yeah, I was told that.
So that's
But
great.
What do you mean by small?
Well, let's see. How much did you get from the back?
Around 14,000.
That
For
was
social
for pensions, right?
Right. Just the pension part.
And how much
the
are you
last
getting
3
per month?
years.
How much are you getting per month?
400.
And that was
Every
from
30th.
August, right?
Right, so that's another
Yeah.
2,000. How much is
So-
your
so it's
Social Security
16,000
roughly?
plus, and your Social Security is how much?
Around before Medicare or after?
The gross
When
amount.
The-
like 2,100.
So that's
Okay,
25,000, 12.
So part of her Social Security is going to be taxable, and she's going to have a little excess here. So
How old are you?
I'll be 68 next month.
Okay, so it's 14. About $350.
yeah, so not
really?
too bad.
Oh, okay. I was worried because I got the whole 3-year lump sum, and then I'm going to have them take so much out of it.
Well, actually, I don't think so, because going forward, if you're only getting $4,800 plus your Social Security,
Right.
it shouldn't be taxable in the federal or the state.
Oh, really?
Yeah, because the only reason that you're going to pay taxes this year is because of the lump sum of money that you got.
Right. Okay. And then
Okay.
you figure like 350?
Around there.
That would
Yep.
be about your tax
Yeah.
liability, yes.
I'm gonna have
Now,
you
if you
do
have
the
some
taxes.
credits,
I'm going to come to your office.
well,
to
that
do
would be
them when
great.
I'm
We'd love
ready.
to help you, but
Yeah.
it's not going to be bad at all, Marie.
Oh, okay. Thanks so much.
You're very welcome.
Thousands.
No, no.
I know, pennies from heaven.
I know. I was completely surprised because I
Well-
really just wanted his Social Security after.
Well, that's great. Good. Well, good. Thanks for calling, and
Thank
that's
you.
great. Good luck for you in your future. Okay, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Our phone number, our text number is 716-8030930. And by the way, during the week, if you have questions, you can go right to our website and enter your tax question, and I get back to you right away.
I had somebody come in and they go, yeah, I emailed through your website a question, and 5 minutes later I got an answer. I was like, wait, wow, that's cool. So I said, yep, that's what happens. Esther's right on it, gets them answered right away
And
for you.
okay, so the other thing I want to talk about is planning for long-term care, which would be nursing homes. So part of the other thing is, as you're getting closer to retirement, is understanding that there's going to come a time when you may want to have long-term care, maybe long-term care insurance, which would be deductible, and you get a credit on New York State for that. Deductible as a medical expense on the federal. And if not, in your planning, you might want to start looking at gifting away some of your assets, because you can gift away $16,000 per person per year, and that might be something you want to do as you plan going forward as well.
Right. And I mean, sit down with an elder care lawyer to make sure everything you're doing is the right thing to do, because, Medicaid is not a nice thing when you go into a nursing home. So you want to make sure all your I's are dotted
Right.
and your
Well, the
T's
whole
are
thing is,
crossed.
that's the whole thing. If you are looking at long-term care and you're thinking, oh my God, I don't know if I have enough to go into a nursing home, understand that's a plan that you need to do. And if you have moved around your money appropriately, and you have some money set aside for private pay for a while, you will find out that you might qualify for Medicaid, which means that they would pick up those expenses to the nursing home. I have seen people who have set aside money their whole life, never did the plan, and ended up paying $15,000 a month for each spouse, $30,000. At the end of the year, after a couple of years, there went their entire nest egg. So planning is so important. That's part of what we're going to do at the Road to Retirement seminar too.
Definitely is get your, looking at that. I always hate to say, oh, I had just had somebody, but I know somebody that the mom's wants to put the house in an LLC to protect it from a nursing home, a second home. And I'm like, well, are you going to be renting it out? No. I said, then why are you forming an LLC when you can
Right.
form a trust?
Right.
It's just different things, and you know.
And the other thing is, don't just willy-nilly put your kids on the title to your home, because that's another bad way of planning, because that's a bad plan. Because what will happen is if upon your death, if they're already on the title, unless it's a life estate, you're not going to be able to get a stepped-up basis. They'll end up paying taxes on what you paid for the house originally, plus improvements. So that's another thing you want to look at. So that's really important. So you want to look at your savings, your pensions, your investments, your home, which is a great asset. Is it paid for? Whether you're young or older, you might want to look at refinancing it, if like using a home equity credit line as opposed to taking money out of some of your other investments, because borrowed money is tax-free.
Correct.
Right?
Yep.
And people don't know that. If you borrow money, it's tax-free. But if you take it out of a taxable investment, then it's taxable. So what you think you're saving by taking the money out of your investment, if it's out of a pension plan, you end up paying so much in taxes, you're actually better off sometimes borrowing the money, especially if you're borrowing it from yourself from a 401k plan.
Yep. Or, or if you're older and you need some extra money, maybe a reverse mortgage.
And I think that's another thing people aren't aware of. A reverse mortgage is it's like you got in your tool kit, you got a Phillips screwdriver, you got a flathead screwdriver, you got hammer, you got nails, different things for different situations. Well, a reverse mortgage, for people that don't know what it is if you're a senior citizen and you have an asset that is fairly well paid down, even if you have an existing mortgage, if you do a reverse mortgage, they will pay off that first mortgage so that you have no mortgage to pay at all. You just have to pay your property taxes and keep the house up. And you can live there at no cost to you, except for those expenses, for the rest of your life. And they will actually pay you per month to augment your income so that you can live a better lifestyle. Now, this is not for everybody. You don't want to bring a hammer if you need a Phillips screwdriver, but there are people, I can think of somebody that I talked to not long ago, who was losing his house because he didn't have the money, had lost his job, and he had no idea about a reverse mortgage, but it's absolutely a great thing if you need that. And that's part of another thing we'll help you with.
Yes. Yep.
Right?
Yep.
All right, I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 in a cell phone. You can text us at 716-8030930. We're going to take a short break. We'll be back on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now.
Oh my God, the Bills are playing again tomorrow. I hope they win. I hope they win against Miami. I happened to have been, and I think Chris was there last year with the whole staff. We went to the Miami Bills game and we cleaned their clock. So,
yes.
But there's going to be a hurricane, so I don't know how that's all going to work.
Yeah. I mean, we're worried about our passing game, the passing because of our cornerbacks, but it may be a running game because if it's windy, they might not be able to throw the ball as well. So we'll have to wait and see and go Bills.
Coach Chris. All right. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 in the cell phone. Text us at 716-8030930. Okay, then here's the $64,000 question. When should I start collecting my Social Security? So if you're somebody that you're looking at 62 as an early retirement, all right? And maybe your spouse is collecting Social Security and you're turning 62 and you're thinking, should I wait? So it is true, if you wait, then you're going to get more later on in life. But here, let me give you, I think the numbers make a lot more sense. let's say that you're not making more than $19,560 a year, because if you do, you have to start paying it back. But if you're 62 and you're making under that 19,560, so you can be working, making 19,000 and not have to pay back any of your Social Security. And let's say that your benefits at age 66 would be $2,000. Well, if you collect it early, you're going to get $1,400. All right, so you go, oh, well, that doesn't sound good. But if you leave that $1,400 on the table for 12 months, for 4 years, you've left $67,200 on the table. So it's true that you didn't get $600 a month, but you've let them keep $67,200. So you won't break even until you're age 75 if you start collecting at age 66 rather than at 62. If you wait till 70, okay, to collect, then what you've left on the table, let me look, is $151,200. And in that case, because they're going to give you more money later, but one never knows if later is going to be there. Do you know what I mean?
Right.
I mean, we don't know when later is, and it'll take 12 years to break out even. So at age 82, you break out even from waiting till age 70, and that's there's all. If you want to give us a call, we'll work out the numbers for you. But the truth is, the only one that's going to make out is going to be Social Security.
Right. And that's what I've talked to people who've talked to lawyers from Social Security, and they say 90 to 95% of the time Social Security wins when people wait.
Right. And then the other thing about taxability of Social Security, if you are a couple, a married filing a joint return, your standard deduction is so high, and the floor is at $32,000. So if your Social Security that you're receiving is less than $32,000, you're going to pay zero taxes on your Social Security, federal and state. And let's say that you have a pension of $18,000. Because your standard deduction is so high, you're going to pay zero taxes on that. So the truth is, you don't pay any federal, any state, and you don't have to pay on your Social Security. Now, if something happens, like you have a windfall, and your taxable income is going to be higher than the $32,000 figure, then your Social Security can become partially taxable. But that's why you want to make sure that you think about what you're doing before you take that windfall, such as rolling over the money from your traditional to a Roth.
Right. And it may be for some people to take out a little extra before they reach age 72 to bring down their minimum distributions when they do hit 72. Okay,
and that's a great point, Chris. Let's say that you're living on Social Security and you have a $400,000 nest egg in an IRA. And you think, I'm not taking it out because I don't have to. And so you wait, and then you have to do your required minimum distribution. But the truth is, and all these people want all this tax-free money, if you take it out now, a little at a time, and you stay under that magic $32,000 figure and that standard deduction, you'll take that money out tax-free.
Right.
And we can show you how to do it.
Yep. Should I read the text?
Yeah, read the text.
Hi, I sold my business and I'm receiving monthly checks for the next 5 years. Will I owe state, federal, and Social Security on that money? Thank you.
Okay, so it all depends. Right?
Well, I would say no Social Security.
No, because it's a buyout.
It's a buyout, right.
But then again, you don't know. Did they structure it that they're paying them a W-2?
Oh, as wages, right?
So what we need is more information, but we'll do this. So if they're paying you wages, then it's going to be subject to state, federal, and Social Security, right? If it's a structured settlement and it's they're doing like an installment sale, then you're going to pay capital gains on the capital
growth.
gain portion,
Yep.
and interest on the money that is part of that payment schedule, and that's going to be taxable on a Schedule D and a Schedule B. I don't know what other way it could be, right?
Right. And, that's if you sold it for a profit.
Right, and that's correct.
What
if you sold it for a loss, Chris?
If you sold it for a loss, then you have a loss on your tax return to help you. So, but we would need you to really sit down with us, give us a call at 632-7886, schedule an appointment, and one of myself, Esther, Tiffany, or anybody else at our corporate office can sit down with you and figure everything out.
Right. And then how would you like it if I told you could do $500,000 every 2 years tax-free? Right?
I'd say, what you smoking, Esther?
No, but it's true. And people, but this is touching one of those sacred cows that people are afraid to touch. If you sell your personal residence every 2 years, gains up to $500,000 is tax-free. You don't have to buy another house. You don't have to reinvest the money in anything. It's completely tax-free. Married filing a joint return, $500,000. If you're single, it's $250,000. But that's another thing that you can do. So that's another tool in your toolbox that you can use to really make yourself wealthy.
Yeah. If you don't mind moving and all that, but if you can make even $100,000 profit every 2 years, I mean,
that's a lot of money because, and then you don't have, like I said, you don't have to reinvest it. But especially when you're getting ready to retire, maybe you want to downsize. Maybe you don't want to have a house payment anymore. Maybe you'd prefer to move in with your kids. Maybe they have an apartment set up in their home. All of those things require, I remember Mike Lomas always says that people don't plan to fail, they fail to plan.
Exactly. Yep.
Right? And that is really true. A lot of us nobody wants to look at this stuff. It sounds horrible, boring. There's all kinds of decisions you have to make. And it just feels better to just stick your head in the sand. But there's some great things that can happen to you when you do plan, right?
Right.
And then the last thing I want to make sure I talk about is a will. There are many people that don't have wills, and you know who you are. You want to make sure you go get a will. It's not an expensive thing to do, but it's really something that you need to put into your tool chest.
Right. And update your will too, even if you have one. There's probably a lot of people out there. Oh well, I did one when I just had my baby. Well, your baby's 40 years old now.
But a baby's
but am I
always
lying?
A baby.
I mean, you gotta update it. You gotta not only update your will, you gotta update your beneficiaries on your IRAs, on your 401ks.
Oh, and that's really important. I'm glad you brought that up. Your beneficiary on your retirement accounts are extremely important, because if you have a beneficiary, when you pass away, it goes over to them, and they have, for all intents and purposes, 10 years to take that money out. If not, it goes over to them fully taxable, and they'd have to pay taxes on the whole kit and caboodle in the year of your death. So that's another thing you want to look at.
Well, not only that, if you don't have the beneficiary, or if you listed somebody who passed away, it goes to your estate or their estate. Yep. And the estate tax rate after $12,500 is the highest tax rate, which is 37%, where you might be in the 12% bracket. So then you're just giving the government an extra 25% on that money.
Absolutely. I mean, there are so many things that and I will tell you, on our website, on Road to Retirement, we have, what's that letter called, Chris?
A letter of intent.
Yeah, letter of intent. If you download that letter of intent, it gives you all kinds of areas of your own personal assets that really need to be looked at, and it'll kind of, give you a minute to think about, oh, we really should do something with that. Oh, we should. How about that? We haven't done that with that, and you're going to find out that it's so much better. Many times when children come in after their parents pass away, they don't know where to begin because nobody's let them have any kind of direction. And they're kind of on their own. That's why many times you find out that there's found money that New York State has, because New York State didn't know who to give it to.
Right, and especially nowadays with everything being paperless, your financial accounts you can elect to be paperless. Your bank accounts can be paperless. How are your heirs supposed to know about that if you don't
let them know?
Right, if you don't let them know, because there's no paper trail.
Right, absolutely. The other thing is, for those of you that are looking for some high interest rates, their interest rates now on money market accounts are approaching 4%. Interest on CDs are approaching 4%. As the Fed keeps raising those rates, you're going to find that you can lock it in for a number of years at those higher rates. So if you can go to bankrate.com, and it'll give you all the banks, all the amounts that you have to put in, how many years you can put it in for to get that rate of return. But here's the thing. I don't know if you got this on this show or not. We really do care. And if you're getting ready to retire, whether you're looking just at your 30s to 40s, you're wondering what the heck to do, looking at the economy, it's kind of scary. If you just give EG Tax a call, sit down, we will go over that, like Chris says, that terrible B word budget, and help you with that. Ask you those kind of questions. Do you have all your beneficiaries in order? Do you know about gifting? Do you want to gift? Do you want to sell your house? Do you want to downsize? All those kind of things, your Social Security, your pension plans, because we want to help. And again, if you have any questions during the week, you can go to our website at egtax.com. And until next week,
and if you want to
go Bills.
Right,
yes.
right. And if people want, you can hear all the different moving parts in a tax return. If you want to learn it, don't forget our tax school.
Oh yeah, our tax school will teach you all this stuff.
Yep.
It's a lot to learn, but it's remarkable.
Fun.
It make you really, really, really smart.
If you're sick like us, it's fun.
I love it. I was talking yesterday to a doctor, and he said to me, "I just love it when something new comes out in medicine." And I said, I said, "You do?" And he said, "Yes." And I said, "You know what? That's how I feel about taxes." So, yeah, we were tit for tat. Anyway, I'm Esther Gillius, the tax lady. Let's pray that the Bills win. I hope they don't get blown away by the hurricane. I'm Esther Gillius, the tax lady, with Chris Fabian. Have a great week. Thanks for listening.